Welcome back to the Junior Small P channel for another look at the news and an off the beaten path approach to reading through some headlines. Well, gold got a little beat up this week. As we've seen, it's been the theme, ups and downs. But we've already made videos on that, and I feel covered our approach to receiving those headlines enough and as much as we probably need to on this channel. But there are some other headlines out there today and that have come out this week that are pretty interesting as they relate to gold. As you know, some things we have to look for that are still being discussed is the impending rate hike by the Fed, which I'm in the camp that tends to bet that might not happen. But we're seeing some movement. Let's take a look at where gold's been going, what's been going on with gold. Yeah, we already know that it has taken some dips here and there. But you look at this headline here, another 54 tons of gold withdrawn. This is over in China. Chinese demand is very high. This is, again, a theme that we've seen kind of play through the last several years. You know, Chinese demand for gold has been very steady and consistent, and it just seems to keep growing. And if you look here, Chinese Shanghai Gold Exchange, physical metal withdrawals are at an all-time high, having already this year exceeded the full year total for 2013, the previous record year. Headline here, 18,000 contracts sold at Comex within a 30-minute time. And if you look here, that's the activity taking place. 18,000 contracts being dumped in about 30 minutes. This, you know, a lot of people try to get pretty carried away, I think, with the conspiracies regarding gold. Some people discuss the nefarious activity that takes place. And a lot of times I try to sit back and think, you know what? No, they can't be that. There can't be that much conspiracy involved. You know, someone would surely blow a whistle by now, or it would be uncovered or discovered. But then you see things like this. And, you know, I try to think the best of people sometimes, but it's hard to in today's day and age. You see headlines like this, you read some articles, and when you look at the numbers that don't line up, you start to really wonder. So we'll look at this real quick. In fact, there were 4 single minutes which saw a total 7,000 contracts dumped on the market. For perspective, 18,000 contracts represents 1.8 million ounces of gold, while Comex claims to have a grand total of 150,000 ounces available for delivery. 1.8 million ounces of gold is equal to well over 1 week's production of every gold mine on the planet. 150,000, on the other hand, is just over 16 hours. For further perspective, China has been importing over 1.3 million ounces of real physical gold each and every week, and amounts to nearly 80% of all gold produced. Why is this important? China is importing each week nearly 10 times the total amount of gold Comex has for delivery in total. Put another way, Comex gold pricing rests on a foundation 10 times smaller than what China imports each and every week. How is it credible that Comex can sell 12 times as much gold in just 30 minutes as they claim to have available for delivery? This sheds a little bit of light on a discussion we had, I would say years ago on this channel, but when it first started out, when I drew a little picture of what Comex bars and paper gold contracts looked like. And that is, you have a gold bar sitting in a room, and on all 4 sides of it, there's windows. And the people that are looking through those windows at that bar are being told that they are the owner of that gold bar. And they cannot see the people in the other windows looking at the bar. So basically, you have all these people being told, yeah, that's your gold in there. You can't touch it. That's yours. You have the contract that says it. The problem will arise when people request the physical delivery of that bar and you have multiple people who think they own, that bar of gold. There is more owners, more contracts than there is actual gold. That's the point. That's what we're have to summarize that. I believe that situation is like a horrible giant that is yet to rear its ugly head or awake from some slumber. And when he does, when the Comex giant rises up and decides to start wreaking havoc, we're going to see some moves and changes in gold prices. I don't pay a lot of attention to the Comex market, I really don't, but it would probably behoove us to start doing so when we see some volatility and fluctuations take place. Keep our finger on the pulse and the headlines. It would probably, and I would say likely, be too late for us to make any moves, us lay people. These are the individuals that work and swim in these circles. They have the information that's necessary far sooner than we will ever see it on the news. They will know to make their move towards physical, and they'll get delivery before we even wake up in the morning and know what took place. Much like the mutual funds that had billions of dollars transferred at 3 o'clock in the morning back in 2008. I know I use that example quite frequently, but when it's nighttime and good people are sleeping, the bad people are out doing their activities. Gold rises as dollar retreats, prompts short covering. Yeah, the dollar took a little bit of dip from an 8-month high. They interpret it as a little bit of a rise in gold prices, but it was nothing to get excited about. We're still hanging out at levels that don't really get your blood pumping too much. So what is all these low commodity prices doing to some of the funds that dealt with them? Well, this was interesting. Trafigura, I don't even know if I can pronounce that right. Very interesting word. Is closing metals fund in latest sign of stress from low commodity prices. This is in the Wall Street Journal. Commodities trader Trafigura Behir BV said it is closing a metals fund in another sign of how global trading houses continue to struggle against low resource prices. Galena Metals Fund, which is operated by Trafigura subsidiary Galena Asset Management, is to be wound down, quote, in view of the difficult conditions prevailing on commodities markets, the company said in a statement. Metals prices have been badly battered by a slowdown in Chinese demand after years of double-digit economic growth, with everything from copper to nickel recently falling to multi-year lows. Well, those metals are dropping, but we just saw earlier that China's demand for gold is not decreasing. I would interpret a Chinese reduction in demand for copper and nickel to a slowdown in industry, to a slowdown in the industrial demand and production and manufacturing. And that does line up with and translate according to a lot of the things you're reading about the Chinese economy facing a precipice, slowing down, kind of grinding to a halt. Back to the U.S. Mint, we covered this recently, but yeah, the U.S. Mint American Eagle gold coin sales surge. Silver at a record as well, silver ounces. The U.S. Mint sales of silver of American Eagle coins surged in November, with gold nearly tripling month over month and silver already reaching a new annual record as bullion prices fell to multi-year lows, data released on Monday showed. The Mint sold 97,000 ounces of American Eagle gold coins in November, up 185% from October and 62% higher from a year ago, after selling out of most of the 2015 dated coins as falling bullion prices attracted buyers. I'm sure a lot of you are in that category. When metal prices are at the levels we're seeing right now, with us having an understanding of where they will most likely be in the future, it is very motivating at this day and age to purchase metals at these current prices. I think it's wise to do so, and I'm confident that we will see prices higher than what we've been looking at recently. That's going to wrap it up for the Junior Small P channel. Hope all of you had a happy Thanksgiving, and we're in the holiday season now, so keep your chin up, think positive thoughts, and keep doing good things. And take care.